All right. So welcome to our today's session because I'm beginning to record now. So and today we are looking at what we call a cash generating unit, which basically is a group of assets that are able to generate their cash flows independently, are able to generate their cash flows independently. So you're told here a cash generating unit, if you're writing down, is the smallest identifiable group of assets that generates cash flows that are largely independent of the cash inflows from other assets or a group of what here? Groups of assets here. A cash generating unit is the smallest identifiable group of assets that generates cash inflows that are largely independent of the cash inflows from other assets or a group of what here? Group of assets. I would want you guys, once you write that statement down and you are able to understand it somehow, can you kindly put your thumbs up? So like RCM College, we have got some assets that are independent, that are able to generate cash flows independently, that are quite, in this case, detached from the other assets, and they're able to generate cash flows independently. Now, ladies and gentlemen, assuming in this case here, for example, that Aura here was to be an asset, assuming that I was to be taken as an asset of RCM. Now, will I be able really to generate cash flows from this AFR class if I don't have another asset here called a laptop? Of course, in this case here, I need a laptop. Assuming that also internet is an asset in that case, I will need internet for me to be able to do what here to, bring this class to your homesteads. And of course, it's by bringing this kind of classes here to your homesteads that we are able to generate what here. So I'm looking at just a small illustration here. We have, ladies and gentlemen, in this case here, Aura as an asset. Of course, I'm a human being. Don't take this literally. Aura, the teacher, is an asset. Then he has a laptop. And then, of course, he has what here? Internet, and even a pen like this, even a whiteboard. All right. So in this case here, these are assets which are independent of other assets of RCM that I'm able to use in this case here to generate, to teach, to generate cash flows independently. As in, we can have cash flows from AFR simply because we've got what here? A list of those assets. A list of those assets. If we miss any of those assets, then that cash will not come from you. So basically, a cash generating unit, as you've seen there, it's a group of what? It can't be one asset. It's a group of assets that are able to generate cash flows independently, independent from other assets of the other assets of the company. And that is why, for example, as a RCM, we have a subsidiary, which is RCM College for those students who love physical classes. That's a subsidiary. That subsidiary is independent from the RCM group. It is able to generate what here? Its own what here? Cash flows. It's able to stand by itself. And that is why if you look at these questions as we progress, ladies and gentlemen, with them, if we progress with them, you'll be able to see here that for exam purposes, a subsidiary is normally designated as a cash generating unit because of the concept of what here? Independence. I've given you a very useless example where I'm even taking like a human being to be an asset in a company. So I would want that gentleman who is going to win my first present in this thematic theory of Valentine here, to give me a very good example of a group of assets that have to work, in this case here, hand in hand with each other to generate cash flows. If possible, in this case, give me that scenario from your company's perspective, and we shall be able to vote for the best gentleman, for the best response. Remember, it has to be a group. Don't tell me that, Mwalimu, we have a bus. It has to be a group of what here? Assets. A group of assets. For example, I talk of RCM Physical College being a CGU, a cash generating unit. Of course, RCM Physical College, there I can see whiteboards, I can see computers, I can see so many things, desks, etc. All those assets are required to be put together to generate the cash. Cash generating unit, a group of what here? A group of assets. Where is this? Where is this gentleman? Where is this gentleman? I love this. The assets, of course, have to be identifiable. Smallest identifiable group of assets that generate cash inflows that are largely independent of the cash inflows from other assets or group of what here? Assets. Where is that gentleman who really is able? Are we done with the impairment laws? No, we are still doing impairment, my friend. We're still doing impairment. Wow, great. I can see good responses here. Consider a multinational company operating in the automotive industry. Within its operations, it has various divisions such as manufacturing, sales, research, development. Very good. Each assets related to research and development, patents and intellectual property, bank and bank branches. Okay, railways. We cannot transport some goods without it, but on its own, it cannot generate cash flows. It has to be incorporated. This lady is giving us a very good example here. I'm actually tempted to give her a present. She's saying that she works for railways. All right. Kwamba akiwa na mabogi, without the rail, there is no way hiyo mabogi ita earn nini? Ita earn cash flows. Tunahitaji rail na tunahitaji hiyo mabogi at the same time. Among other assets for us to be able to generate. So it means automatically that, of course, the track itself, plus in this case here now the locomotives here, automatically they form what we call a cash generating what here? A cash generating unit. They form what we call a cash generating unit. A cash generating. So Magadi Railway Line, you can see somebody else is again coming with this Magadi Railway Line. All right. All right. Entity D, I can see very good. You guys, all of you are winners really here. Entity D makes biscuits and has factory full of machinery. Its wrapping machinery generates no distinct cash flows because it simply performs the end function in the many steps to producing biscuits ready to sell. I think Richard has, to be very fair, I don't know whether I'm the one who is, to be very fair, I think Richard's response is the best. What do you think? What do you think? I'm throwing the ball back to you. Whose response do you think is the best? Gentlemen's responses. Leave Evelyn out of this. Gentlemen's responses. Which response do you think is the best in terms of cash generating unit? Cash generating unit. Cash generating unit. Cash generating unit. Computers, furniture, patents and copyright. Aggie, I like that. Great. I hope it doesn't reach to a point where I'll be called for a wedding because I don't attend weddings where my students here marry each other. I believe in diversity. I believe accountant or CPA should be able to marry like a primary school teacher or a nurse. That's what I believe in. I don't believe in accounting for an impairment. An impairment loss is the amount by which the carrying amount of an asset or a cash generating unit exceeds its recoverable amount. Now, I don't want to go through all this. Already you have done that. What I would want us to do here, ladies and gentlemen, is to look for how do we allocate impairment losses to cash generating units. How to allocate impairment loss to CGU assets here. I may forget about everything else, but I know whenever there is any impairment loss, first of all, you knock down the goodwill. That's what I'm able to remember from those days when I was taught this thing. That the very first asset, because once you realize, ladies and gentlemen, that a cash generating unit does not have, or rather has been impaired. It means that that cash generating unit, if it has got any asset called goodwill, that asset is fake, because you can't be having goodwill and you're not able to generate enough cash flow. If you have a goodwill, then you should be able to generate actually excess. So the moment a CGU has an impairment loss, amongst the assets that will be able to absorb this impairment loss will be what here? Goodwill. It is the concept of you knock down goodwill first. You knock down goodwill first. That's very, very important. And then, of course, we have what we call specific assets. You know, there are those assets here that you'll be told that this one has been impaired fully. Then, of course, in this case here, you have to impair those ones before you distribute the remaining impairment to the other assets pro rata to their carrying amounts. So I would want us to write that statement, but the very best way of writing it down is by having a small example for us to be able to see the procedure here. Knock down goodwill first. And then we have, you knock down those specific assets that have been mentioned here to be fully impaired. Any excess now impairment loss will be shared amongst all the other assets in a proportional way. Let me get an example ndio muweze understand what mwalimu is talking about. All right, I love this a lot. All right. So this is the example that I would want us, ladies and gentlemen, to look at. This example here, allocation of impairment loss to the CGU assets. If an impairment loss arises in respect of a cash generating unit, IAS 36 requires that it is allocated among the assets in the following order. We have goodwill, other assets in proportion to their carrying amount. Shika kwanza hiyo, that this impairment loss will be, in this case here, allocated to goodwill and other assets in proportion to their carrying amounts. We shall overcome. Don't worry about specific assets. Let's do this example, impairment allocation within the CGU. I love this question. Great. Let's read this question. And you guys, all of you, of course, you have this book, isn't it? You have this SBR book. Do we have this book, all of us? Because I don't want you to be writing all the notes. Do we have this book, all of us? Do we have this book, all of us? This book is a savior. Your examiner gets questions from this book directly. It's a savior. It's a savior. Do we have this book? Do we have this book? It's a savior book. Allah? Who is this saying no? Okay, we shall not attach it here because we shall not attach it here. I shall send it to our paid groups later. All right. So you're told here TNAD has identified an impairment loss of 41 for one of its cash generating units. The carrying amount of the unit's net assets was 150 million, whereas the unit recoverable amount was only 109. Can somebody in this case here, look at this question. They've given us the car and they've given us the RA. Can somebody in this case here give me the impairment loss? They've given me the car of the CGU and they've given me the RA of the CGU. The car is 150 and the RA is 109. Remember, to get impairment loss, oh yeah, to get impairment loss, we normally take the carrying amount minus the recoverable amount. Carrying amount minus the recoverable amount. Carrying amount in this question is 150. Recoverable amount is 109. That is how they got the dollars what here, 41 million. That's how they got the dollars 41 million. Thank you very much. That's how they got the dollars 41 million, like that. Now, ladies and gentlemen, they're telling us here that the draft values of the net assets of the unit are as follows. I can see goodwill. If this CGU is impaired, it should not be having that goodwill. I'll knock it down. I'll knock this goodwill down. So you're told here, the net selling price of the unit assets were insignificant, except for the property, which had a market value of 35 million. The net monetary assets will be realized in full, because net monetary assets, these are like bank balances. Net monetary assets will never be impaired. Net monetary assets are never impaired, not unless your government defaults on its loans. That's when you will be able to get a haircut, everybody, including what you have in your bank. Otherwise, net monetary assets, I'm repeating again, that net monetary assets, which include cash at bank, will always be realized in full. Those ones are never impaired. Those ones are never impaired. So then the required, how is the impairment loss allocated to the assets within the CGU? 16 marks. I will get everything here. I will get everything here. What I'll need to do first of all is to copy these assets of mine. Put a table down. Put a table down for the assets. It's a list of assets. So it is a cash generating unit. So it is a cash generating unit. It is a cash generating unit. It is a cash generating unit. So we have goodwill. So we have our assets here. We have goodwill. We have, in this case here, property. We have, in this case here, machinery. Then we have, ladies and gentlemen, vehicles. Then, ladies and gentlemen, we have patents. We have patents. And then lastly, we have net monetary assets. Net monetary assets. Una copy the carrying amount. The car for each one. The car for each one is 13. It is 20. Machinery is 49. We have vehicles. It's 35. Vehicles, we have 35. Patents, we have in this case here 14. Patents, we have 14. Net monetary assets, we have 19. Giving us a total carrying amount of 150. Once you copy that table, are you able to put your thumbs up? I want to teach you AFR in a very simple way. And by the way, how is my board? Is my board clear? Are you able to see my board somehow? All right. So at least one person here has been able to finish writing. I want to teach you this AFR like it has never been taught before. So long as you, thank you very much. So katikati hapa, unaandika jina, hata kama understand chochote, unaandika jina impairment loss. Unaandika jina impairment loss. Unaandika jina impairment loss. Alafu hapo unaandika RA. Acha niandike in full because we have friends who are new today. Recoverable amount. Recoverable amount. Your recoverable yangu ni fake. Inafaa kuwe recoverable like that. Recoverable amount. And please in carrying amount. And then we have impairment loss. Now, once you write up to there, could you kindly please put up your hands? Please put up your hands. Please put up your hands. All right. Thank you very much. Thank you very much. Please rub this one here as you cast me. This is wrong. Inafaa kuwa new carrying amount. Tuandike hivi. New carrying amount. Because it may not. Andika hivi. Rub you andika new car. It's a new car. It's a new car. So ladies and gentlemen, in this question, what is our impairment loss? You guys gave me a figure of 41. Isn't it? You guys gave me a figure of 1, or rather 41. And then, of course, you gave me a recoverable amount of what here, if I remember very well. You gave me something here. You gave me something here. 150 minus 41, you gave me something here. Was it 109? You guys gave me something like 109. All right. Sasa wacha tuanze maajabu sasa. Sasa hapa ni mambo mzuri sana. Mimi nakwambia ukianguka AFR, ujue uko na shida. This semester sawa, lakini semester ukianguka AFR, uko na shida, and we shall be able to recommend another course for you. Now, ladies and gentlemen, normally what I'll do to be able to distribute that 41 very nicely, there are assets that have not been impaired at all. There are assets that have not been impaired at all. So if they have not been impaired at all, then I should be able to write 0 in the column of impairment loss. Is there any student who is able to identify those assets that have not been impaired at all from this statement? From this statement, is there any student who is able to tell me, Mwalimu, this asset has not been impaired at all? This asset has, remember, this is a week for presence. This is a week for presence. A week for presence. Assets that have not been impaired at all. There are 2 of them. There are 2 of them. There are 2 of them. So we have net monetary assets. Bank balance, of course, will never be impaired. And then we have this crazy guy, crazily bright guy. Of course, anajita 256, 145. Here, ameshajua kwamba property has not been impaired at all. This must be a very good student. Great. Ata Joy pia must be a very good ninja. Great. So in this case, ladies and gentlemen, for net monetary assets and the impairment, this is not impaired at all. Also, property is not impaired at all. Unajua kwa nini haijakuwa impaired? Oye, wacha ni explain something. Oye. Let me explain something. We know that whenever they want us to compute impairment loss, whenever they want us to compute impairment loss, we normally take car minus ra. For property alone, what is the car? The car for property here is 20. The car for property there is 20. But they are telling us something very nice. They are telling us something very nice there for property. Or property is partially impaired. Are you sure? Let's see. I like this kind of arguments. So they're telling us here, the net selling price of the unit assets were insignificant except for the property, which had a market value of 35. You see, the market value is 35. The market value is 35. You see, market value is the same as what here? Fair value. Fair value. So they haven't given us value in use. But regardless, we know that the recoverable amount in that case here will never be below 35. So basically, we can say that recoverable amount for the property, because the fair value. Remember, let me just get back a little bit here. How do we get recoverable amount? How do we get recoverable amount? To get recoverable amount, this is what we normally do. To get recoverable amount, we normally compare between 2 things here. We have fair value versus what we have called value in use. So fair value, they are telling you fair value is 35. Fair value is 35. Value in use has not been given. So in this case, here, assume it is 0. Value in use that it has already, it has already been given. Assume it is 0. So meaning that the recoverable amount here will always be the higher between the two. So the recoverable amount will be 35. The recoverable amount will be 35. So then who will be able to give me the impairment loss in this case here for property? For property, who will be able to give me the impairment loss for property? For property, will be able to give me the impairment loss. Oh yeah. Oh yeah. It can never be negative, isn't it? It can never be negative. Remember, by definition, we said that impairment loss happens whenever recoverable amount is lower. Is lower. If recoverable amount is higher than carrying amount, whenever recoverable amount is higher than carrying amount, that asset's impairment is nil. Is nil. So impairment loss for property here is 0, not partially impaired. It is 0. It is 0. So first of all, up to here, are we really together? Up to here, are we really together? Up to here, especially for the net, even if I understood nothing, but at least net monetary assets, I know those ones will never be impaired. They are never impaired, and they are in your past papers. They are never impaired. And then property, of course, property again, we've seen that property, thank you very much, big yes, yes. So then I can come and rub this for me to create space. Now from there, ladies and gentlemen, after I've been able to do whatever I've been able to do here to identify those assets that will not be impaired at all, or where I have what we call specific impairments being awarded, then what I'll do, you see, in total, I've got how much to give out? To give away 41, which I want to share to all these assets. Who can give me the criteria? How do I share this 41 out? Abracadabra, this is a week of presents. I have RW that I've been able to identify for a gift. And then I have this gentleman, Richard, yes. Richard, yes. Now I'm looking for a third guy. Abracadabra. Miss Karanja. Before percentage. Miss Karanja amesema ukweli, before percentage. Start with goodwill. Imagine, you want to reward gentlemen, but again, it's the ladies who are very vocal. So I don't know even what to do. Do we turn the tables and start rewarding ladies? I don't know what to do now, because ladies are more vocal. Do we turn tables? Do we turn tables and start rewarding ladies? Then first of all, we have to impair good, not patents, not patents. Not patents, no. There is nothing like patents cannot be impaired fully unless you're told so. In this case, it is goodwill that will be impaired fully. Thank you so much. So goodwill has this 13, impair it fully. Give it 13. Give it 13. Then what do we do with this other? What do we do with these other assets now? Abracadabra. What do we do with those other assets? Now it is the concept of what here? Proportionate. You share the remaining impairment loss proportionately. Thank you very much. So in this case here, come and give us the remaining impairment loss. Give us the remaining impairment loss. Remaining impairment loss. So this will be 41 minus what has been allocated here, minus 13, minus 0, minus 0. The remaining impairment loss. The remaining impairment loss, on a 28. 28. And this will be given, will be shared by which assets? By which assets here? Which assets are going to take this 28? Which assets? It can't be goodwill again, it can't be property. Now it is machinery, it is vehicles, it is patents, net monetary imeenda. So in this case here, we are sharing this with, between machinery. Machinery. We have vehicles C. Vehicles. We have in this case here patents. We have patents. Patents like that. That's it. So come and give me their, remember the proportions will come from carrying amounts. Give me their carrying amounts. Give me their carrying amounts. Oh yeah, the carrying amount of machinery, 49. The carrying amount of vehicle C, 35. The carrying amount of patent C, 41. Giving me what total? What is the total of these assets here? Carrying amount. Total of those three carrying amounts, 98. So abracadabra, this is how you play around now with this 20. So nasema 49 divided by 98. Let's make proportions. 35 divided by 98, 41 divided by 98. Abracadabra, you multiply this with the loss to be shared. You multiply this with the loss to be shared. You multiply this with the loss to be shared, and then you give me answer C. Oh, my patent is supposed to be, sorry, my patent is supposed to be what now here? My patent is 14. Patent. Oh yeah, oh yeah. Patent is 14, not 41. What am I writing here? Patent is 14. So will this still remain 98? Will this still remain 98? Will this still remain 98? Oh yeah, thank you very much. Yes, thank you very much. So then abracadabra, what do we have here for machinery? What do we have here for machinery? 14. Dave Awino, machinery 14. Thank you very much, Dave. How about vehicles? Vehicles takuwa ngapi? Vehicles is 10. Miss Karanja. And then we have patents. Patents ni ngapi? Patents ni 4. Thank you very much. And then I'll give me the new carrying amounts, abracadabra. Give me the new carrying amounts. Give me the new carrying amounts. Give me the new carrying amounts. I've rubbed this. I don't know whether I've moved fast there. I've rubbed a very bad section. Abracadabra, are we together really? I think I've moved a bit fast there. But I know you guys are ninjas. Perhaps you've also, you may have written. I don't know. Are we together there? Are we together up to here? Great. Frida Ngatia. Great. Thank you very much. Thank you very much. So then give me the carrying amount. Abracadabra. Abracadabra. So remember the gentleman who will be getting this present, like Richard. Don't forget that there is a lady, Aggie, who wants just a coffee date. Coffee date. So in this case, here, the new carrying amount will be 13 minus 13, which is 0. And then we have 20 minus 0 is 20. 49 minus 14. 49 minus 14, abracadabra, we are subtracting. 49, 35. Thank you very much. 35, 35. 35 minus, you know, loss, of course, you subtract. 35 minus 10, this gives me 25. 14 minus 4 gives me 10. 19 minus 0 gives me 19. And then when you add all this, they must add up to this 109. That's how you confirm. They must add up to 10. Thank you, Evelyn, like that. Thank you so much. Perfect, yes. Now then, let's go to our past papers. Do we have our past papers with us? Let's go to our past papers. Do we have our past papers? Great. So then I would want us to do 2 questions here. I would want us to start with August 2022. August 2022, question number 2A. August 2022, question number 2A. August 2022, question number 2A. Do we have it? August 2022, question number 2A. Thank you very much, Paul. Paul anapatangiza maswali haraka haraka sana. August 2022, question number 2A. Thank you very much, Vero Chalo. All right. So, ladies and gentlemen, what do we have here? On my app. So abracadabra. August 2022, question number 2A. Very easy things, very easy things. Ndio maana nimekuambia hii semester ukipata umeanguka hii subject, tafadhali AFR, utaruhusu mwalimu akuchagulie kosa ingine? Mwalimu anasema kitu mzuri ama mwalimu anasema kitu mbaya? Unaweza kuwa naongea bila kujua, lakini naongea mbaya. Sisemi other semesters, but this semester. This semester ukianguka, this semester, if for example you happen to fail this semester, then we should be able to look for up something for you. Abracadabra. Na watabiria mema. Ni vile sasa kama Verochalo ajui hiyo Kiswahili. Unajua Verochalo sana ni mtoto mdogo sana. Sasa mwalimu akiongea na lugha ile ya wazee haizi shikanisha. Yeye na kama mimi nataka yaanguke tena. Hapana. Hapana. Wewe ni mtoto bado. We shall overcome. Although it's also good to be young. All right. So, okay. Thank you. So August 2022, question number 2A. All right. So we are told there B Limited operates a factory in its sole cash generating unit CGU. During the year ended 30th April 2022, there was an explosion in the factory, which necessitated an impairment review. The carrying amounts of the factory assets were as follows. So we have goodwill, patents, machinery, computer equipment, premises, giving me 47,600 as the carrying amount of the CGU. An impairment review revealed a net selling price of 19.2 and a value in use of 31.2 for the factory. So mimi nitamchorea kitu kama hii. Mimi najua kuchora sana huyu examiner. Nitamwandikia nimwandikie hivi. Nimwandikie namna hii, nikuje hapa, nimwandikie fair value, na hapa nimwandikie value in use. Value in use. So in this question here for this CGU, you see fair value is the same as net selling price, because this fair value less cost to sell. Fair value less cost to sell is the same as what your net selling price. So the net selling price in this question, the net selling price is 19,200. 19,200. And then the value in use is 31,200. This is a very, very lazy examiner. A good examiner for value in use, he should have given you cash flows. And then he should have required you to compute value in use. All right. But seemingly they are good people here. So in this question, then what do you think is the recoverable amount? What do you think is the recoverable amount? The recoverable amount, is it 16? No. Recoverable amount. Yeah, the higher, isn't it? So here you mention there very fast that recoverable amount is the higher between view and, so in this case here, therefore, recoverable amount equals the higher 31,200. By doing that, you have 1 mark. 1 mark in AFR will take you to places that you have never seen before. Places that you have never seen before. Abracadabra. All right. Now, ladies and gentlemen, after we do that, we shall be able to move on to the next thing there. So they're telling us half of the machinery have been destroyed and have no resale value. The patents have been superseded and are now considered worthless. So even patents now, they are considered worthless. Meaning that, what do you understand by that statement? That now they are considered worthless. What do you understand by that statement? What do you understand by that statement regarding impairment loss? You know, if somebody today was to use a very bad language that you are worthless, very bad language for against any human being, that automatically means that they are giving you value of 0. They are basically giving you full impairment, that patents have been fully impaired. Patents have been fully, thank you very much. patents have been fully impaired, they'll be written off. This guy should get a present. They'll be written off fully. Thank you so much. You guys are bright. And then they're telling us there, the company follows the cost model as permitted by International Accounting Standard, property, plant, and equipment. Of course, that is what year? That is hot air. They want to use that to scare you. I will not use that anywhere. Useless statement. Discuss with suitable calculations how any impairment loss in the cash generating unit would be accounted for in accordance with IAS 36, impairment of what year assets, and they're giving us 10 marks. This was a very good examiner. Such examiners here will go to heaven directly. Because if you got an experienced examiner like me, you can't get it that easy. It can't be that easy. It can't be that easy. That's why you should always be praying that you don't get very experienced examiners, because an experienced examiner will always try to twist your hand this way. So that by the time unatoka kwa hiyo exam room, unashindwa hata uwezi fanya catwalk. Ama kama ulikuwa umeweka makeup hata ni machozi tupu, sasa inakuwa international disaster. We shall overcome. Be kind. Yaani ile swali unaenda kwa exam unasoma swali question 1, unaona kama ni home science ama nini. Inafaa kuwa advance. Mpaka unataka kuinua mkono uulize examiner kama ni right paper. All right. But as soon as we progress, I'll always be giving you those tips like, how does this examiner in this case here twist your hands? All right. All right. All right. Yeah, so I'll be giving you those strategies as we move. We shall overcome. We shall overcome, don't worry. We shall overcome. Ushaenda kufanya exam as a lady, ulikuwa umebeba high heeled shoes na ulikuwa na as a lady of course unatemea viatu yote namna hiyo. Ile high heeled shoes ukitoka kwa mtihani inakosa kazi. Inabidi uchukue uweke zile low heels uanze kutembea. Hiyo ndio the kind of bad exam we're talking about. So inakuwa international, hata catwalking sasa unatembea normal kwa nyumbani. Inakuwa international disaster. We shall overcome. We shall overcome. We shall overcome. So this question, hakuna present value hapa. Hii ni the only thing ambayo examiner anaweza tumia hapa confuse. Let me write this for you. Hapa kuna an asset which was partially impaired. Which was partially impaired. So hapa ukitaka vizuri, wewe kuja hapa andika tu assets. So andika assets. So sasa assets hapa uko na goodwill, uko na patents, uko na machinery, and machinery now is divided into two. Ukiangalia pale machinery kuna ile half machinery, half ama fully impaired. And then now we have in this case here what we can call other machinery, which were not impaired, which were not fully impaired, which were partially impaired. Other machinery. Andika namna hiyo. Hapo ndio trick tu iko. Alafu kuna computer equipment. Kuna computer equipment. computer equipment, after goodwill, 2,000. Patents, 3,600. Remember, these are their carrying amounts. That is 600. Then we have 4,000 is total machinery, of which half was fully impaired. We have to separate the fully impaired. Fully impaired. So half was fully impaired. So half is 2,000, and then the others will be 2,000. So that these two will give us 4,000. Then we have computer equipment, 8,000. And then we have premises, 30,000. So give me impairment loss column. But first of all, calculate it. Is there somebody who can remember how we calculate impairment loss? IL, it is CAR minus RAR. So the carrying amount is this total figure here of 47. The carrying amount is this figure of 47,600 minus the RAR. What is the RAR here? What is the RAR here? We already gotten the RAR. It was 31,200. 31,200. So we can subtract up what we have, ladies and gentlemen. Dave tells me 16,400. Gera, 16,400. Thank you very much. 16,400. So now please go ahead and apportion that 16,400 to the assets, knowing that we have got some specific assets whose impairment loss has been given. We have specific assets whose impairment loss has been given. For example, we have these are half fully impaired. So we know that these 2,000 is fully, so this has been given expressly. All right. The same case with patents. They're fully written down. 3,600. 3,600. What do you think of goodwill? What do you think of goodwill? Goodwill will go, isn't it? Goodwill will go. Goodwill will go in full. Goodwill, we know the amount here, the impairment loss. We know the impairment loss, 2,000. And then now we have the other assets remaining, sharing the remaining impairment loss. So you come and give us the remaining impairment loss. Remaining impairment loss. Remaining impairment loss. $16,400 minus what has been given out. So what is the remaining impairment loss? $8,800, right? 8,800 to be shared out, to be shared between. We have other machinery. Other machinery. We have here computer equipment. Computer equipment. And then we have premises. So other machinery, remember we normally, proportions, we normally use carrying amounts. So other machinery is 2,000. Computer equipment is 8,000. Then we have premises, 30,000. Is there somebody who can give me this total, ladies and gentlemen? What is this total carrying amount for the three? Total carrying amount for the three, and Gera gives me 40,000. Gives me 40,000. All right, so it will be 2,000 over 40,000. Over 40,000. Over 40,000. Times the balance of the impairment loss. This balance of the impairment loss is what we are sharing out. Times 8,800. 8,800. 8,800. So then are you able to give me the figures, ladies and gentlemen? Are you able to give me the figures, ladies and gentlemen? Are you able to give me the figures? So the first one, Queen Magdalene, she's giving me 440. The first one here. So other machinery, we have 440. How about computer equipment? Computer equipment, what do we have? Premises 6,600. Premises 6,600. So lastly, how about computer equipment? 1760, right? 1760, right? 1760, thank you very much. 1760. Then I should be able to get the new carrying amount that I'll be able to take to the financial statements. So we have here the new car. So of course, this is 0. This is 0. This is 0. This will be 1960, the year that I was born. The year that I was born. Oh, it's 17, eh? Is it 17? I have a problem with machinery. Okay. I'll be able to solve it. 1760. Okay. And then we have in this case here, other equipment. Are you able to give me the other equipment figure? It can only be 17, whatever. Other equipment figure. 1560, other equipment. I don't know where these figures are not matching up. The figures are not matching up. 8,000 and 1760, I don't know. I don't know, they're not matching up. They're not matching up. There must be a problem there. Computer is 62. 6240. Computer is 6240. Computer here is 6240, like that. Aha. So then please give me the correct answer here for computer equipment. How much do we have there for computer equipment? 23,400 premises in maneno, 23,400. Thank you so much. 23,400. Computer equipment iko na tashwishi kidogo. Computer equipment iko na tashwishi kidogo. 6240. Ah. Hapana. Because sasa hizi hazitaongezeka to 8,000. Hizi. I think ilikuwa ni 1760. Ndio ikuwe 6240, I don't know. So long as you guys have been able to follow. So long as you guys have been able to follow. So long as you guys have been able to follow, that's the most important thing. 1760 balance, okay. Great. Then that's okay now. Great. So there's a student who is not able to understand this machinery. You see, machinery, in total, the machinery figure given there is 4,000. Of which nimekuambia out of this total of machinery, 4,000, half of it, when we did this impairment review, half of it we discovered is fully impaired. So half of it is fully impaired, then the other one is partially impaired. So that in that case here, then you have to split that into two. Fully impaired, half of it, 2,000. Partially impaired, 2,000. So you can see in this case here, at the end of the day, how do we interpret this? We are saying that these half, which are fully impaired, 0. And then this other part, which is partially impaired, after we're able to get the impairment loss, it gave us 1760, like that. Perhaps when you look at this video later on, you'll be able to appreciate it even better. Other machinery, car is 1560. Other machinery. Other machinery, car. Are you sure? 1560. 2000 minus 440. Oh, 2000 minus 440, right? 2000 minus 440, right? 1560. Thank you very much, because we want to also produce correct videos. So here we have 1560. Thank you very much. 1560. So up to there, are we together somehow? Up to there, are we together somehow? Are you able to pick some nice things here? All right. All right. So we shall take a short break. A short break over how many minutes? Kabisa, great. We should take a short break. And during this short break, I need to give you a very nice story. A short break over how many minutes? 7 minutes. It should be a 7 minutes break. September. My video, yes. So now we are doing September 2021, question number 5C. September 2021, question number 5C. Okay. So we are doing September 2021. Question number 5C. Have you guys gotten the question? Have you guys gotten the question? September 2021, question number 5C, the last question in this subtopic. September 2021, question number 5C. Have you gotten the question? Have you gotten the question? Abracadabra. Why they are not talking to me? They are not talking to me. Or am I muted? No, I'm not muted. Got it. Thank you very much. They've gotten it already. They have gotten this question. Now, this is a question that was tested by a serious examiner, an examiner who understands this standard very well. And so many guys never managed to get this question correctly. So we are told there, Haka Limited acquired 100% of Angaza Limited, September 2021. Imagine hata swali ikiwa ngumu aje. Wewe so long as uifuate tu polepole, utapata marks zote. 100%. Haka Limited acquired 100% of Angaza Limited on 1st October 2017. So Angaza Limited exports electrical materials across the world. As at the date of acquisition, goodwill of shillings 12 million was calculated. The entire amount of this goodwill has been outstanding since then because Angaza Limited's recoverable value has remained higher than its carrying amount. I mean, so far, there was any impairment loss. No adjustments to the group financial statements relating to this matter has been made yet. Angaza Limited's business is divided into two cash generating units, the industrial division and the domestic division. When Angaza Limited was originally acquired, 8 million of the goodwill was attributable to the industrial division and 4 million to the domestic division. Remember, the total goodwill was 12. So 4 plus 8, 12. The carrying amounts of Angaza Limited, CGU, as at 30th September 2020 were as follows. So I can see PPE, inventory, blah, 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 blah. In relation to the recoverable values of the divisions, it has not been possible to establish the net selling price for either division, but an estimate was received of the future cash flows for each of the CGUs for the next 5 years. These were, I can see for industrial division, I can see for domestic division, all right. Additional information. The industrial division could be sold at the end of year 2025 for an estimated shilling 6 million. The domestic division would be held indefinitely, generating cash flows of 1,500 per annum in perpetuity. The pre-tax cost of capital of Angaza division is 8% per annum, and the rate of tax is 30%. The following discount factors are given. Calculate the impairment in conformity with the IAS 36, impairment of assets that should be recognized in the group's financial statements for the year ended 30th September 2020 in relation to Angaza Limited, 10 marks. Good examiner or bad examiner? Good examiner or bad examiner? Talk to me. Good examiner or bad examiner? Very good. Very good examiner. Ameanza kusweat. Very good. Yeah, just use operating cash flows instead of PAT. Good. Let's see what this examiner has for us. So this is a very easy question. Indeed, very easy question. So long as you panic, so long as you don't get to panic. So, ladies and gentlemen, what I can do there straight away, I'm able to see, I'll handle one division at a time. So we have industrial. So we have industrial division. So we have industrial division. So for industrial division, if I'm the one doing this question, I'll get all the marks even without knowing what is required of me. Because I know here, the tricky bit in this question is to get the recoverable amount. And the recoverable, you see, to get the recoverable amount, I need two things. Recoverable amount, najua ni fair value, less cost to sell, of which this one in Kikuyu language, right? Gotire, this one has not been, you can't get it. That's what they told us. Fair value, less cost to sell, you can't get this. And then the other one is the value in use. The view like this. And this is present value of cash flows given. Present value of cash flows given. Present value of cash flows given. All right. All right. So then what I will do right away, ladies and gentlemen, what shall I do right away, really? What shall I do right away? So what I'll do right away here is to come and look for those cash flows for industrial division. So you're writing these cash flows down. So we know that we shall only get this. This one we've been told not possible. You can't get fair value, less cost. That's what they told us in one of the notes. Actually, in the last paragraph before the table of industrial division, they told us, in relation to the recoverable value of the division, it has not been possible to establish the net selling price for either division. And you see net selling price is the same as what here? Fair value. So this is what given. So in this case here, my recoverable amount will be the view. like that. Once I get that, then I'll get all the marks without knowing what I'm doing. And I really love it when I'm getting all the marks in a question without knowing what I'm doing. So ladies and gentlemen, these cash flows, how do we normally get our cash flows? How do we normally get our cash flows? To get our cash flows, we normally take PAT and then you add back depreciation. If you remember from finance, I'll be able to show you this in the next class. But basically, it's supposed to be PAT, profit after tax plus depreciation. So in this question, no depreciation is given. So the PAT will be our cash flows there. So industrial division. So industrial division. So we have our cash flow, So we have the year 2021, 2022, 2023, 2024, 2025. The first cash flow there is 1,200 for industrial. The first table given there, 1,200. We have 1,200. We have 690, 690. We have 590. And then we have 590. 590. So ladies and gentlemen, even if it means you looking for some matchsticks, those matchsticks that you can use easily to ensure that your eyelids, so you're able to see, hold on to your eyelids for you to see very well. Because I'm so sure at this time, there must be somebody who is really sleeping. Somebody who is looking at Mwalimu from the screen and saying, today, how comes Mwalimu is very, very tiny? Na si Mwalimu amekuwa tiny. Ni macho ya usingizi. Unaona ikiwa mbali sana. Macho ya usingizi. Okay, so I would want in this case here, you look at this table very well, industrial table. Are you able to see these cash flows given there? The PAT, the profit after tax. Are you able to see the profit after tax? Are you able to see the profit after tax? Watch. Are you able to see? Una kama huyu anasema Machakos, all that for 10 marks. Wacha uoga wewe. Hakuna kitu wapata, hiyo ni marks mingi sana. Hii inafaa kuwa marks 2 peke yake. Thank you very much. So then remember here, the confusing thing was that in 2025, they are going to sell the entire division. And then they are going to realize how much. Are you able to see the amount recoverable in 2025? How much are we going to get in 2025 if we sell the industrial division? If we sell from note number one, the industrial division could be sold at the end of the year 2025 for an estimated 6,000, isn't it? So that's a new cash flow coming to us in 2025. So you can come and include it here, plus 6,000. So meaning that 2025, you're supposed to talk of 6590, and then come and give us the PV, present value interest factor. Fortunately, they have given us the figures down there. If you look at the figures given to us down there I can see 0.926, 0.926. Then we have, ladies and gentlemen, here 0.857, 0.857. Then we have, ladies and gentlemen, here 0.794, 0.794. Then lastly, 0.794. Let's keep any 0.794, 0.735. And then lastly, we have here 0.681. 0.861, and then you give me the present values. You are getting marks as other students are sweating from the wrong places. You know how you can sweat from the wrong. I normally tell my students, please, if you're sweating, sweat from anywhere inside here, that's okay. Nobody will be able to see. But when you're sweating from your forehead here at your age, that will be very, very wrong. Especially if you are like 35 years plus. You're no longer a youth, and then you are sweating. Kiku's call this one DV. DV, very bad, very bad. So as others are sweating from the wrong places, I'm pinning down things without even knowing what is happening really. I'm getting things there. So they're giving me figures here. It should be cash flows after tax. Remember how we get, it should be PAT. PAT, profit after tax plus depreciation. I'll be able to show you this, but it should be profit after taxation. All right. So Ngera gives me 111.2. 111.2. 111, the first one. 111.2. And then 2022, what do we have there? Life is good. Life is good. 2022, what do we have there? 2020. Ameanza kulala kusema ukweli. 11.2. Kwa hivyo inafaa kuwa 11 ama 111. 11, thank you very much. 11.2. Yeah. Sasa tuende katika Lucy Wanjiro 1028.4. 1028.4, like that. And then we got 2023. Yeah, abracadabra 547.86. 547.86. And then we go to 2024. According to Juliana, these ladies have very good names. Iko mwingine anaitwa Bekilizi. Leo hajaongea Bekilizi. Leo hajaongea 433.65. Aha, ya mwisho je? Ya mwisho abracadabra. Oye, ya mwisho je? Abracadabra. Oye. Oye. Oye, ya mwisho je inakuja ngapi? 4487.79. 4487.79. 4487.89. Is it 0.89 or 0.79? Miss Karanja. Purity. Tujata Purity pia tumuite Miss Purity. Ni 0.79 wewe. 0.79. So please give me the total here. Please give me the total here. Please give me the total. According to Ngera 7608.9. 7608.9. Thank you very much. So what name do I give to this total present value? What name do I give to this total present value? What name do I give to it? Abracadabra. And I'm so happy because I can see most of you guys are around. Yeah, thanks, Chris Amdanye Kibut. This automatically, of course, I know it's value in use, but in this context, it's a recoverable amount. It's a recoverable amount. This is recoverable amount. This is recoverable amount. Because we don't have fair value, less cost to sell. So this is a recoverable amount. This is recoverable amount. This is recoverable amount. This is recoverable amount. Kusema ukweli kabisa, wacha niulize tu swali, tusema ukweli tu kabisa. Kufanya mpaka hapo kweli, ulikuwa unahitaji any special skill? Sema tu kweli kabisa. Ulikuwa unahitaji any special really that you have to be very bright. Kufanya mpaka hapo, you must be very bright. Kusema tu kweli kabisa. No. So long as uko na idea like it's cash flows, alafu uchunge kale mwaka ya mwisho, unaambua kuna scrap value. You realize that scrap value. Imagine unapata kila kitu. So, and that is why I normally tell my students, please never panic in an exam. Never panic in an exam. It is the panicking that throws the students, in this case here, outside what year? The bus. You need confidence, yes. Kujua part, yes. The language. Now, please give me the carrying amount of the industrial division. Hii pia nilishinda wanafunzi wengi sana. You know, mimi nikienda kumark exams, normally napenda kumark AFR sana, because AFR najionanga mambo mengi sana. Like in this semester, very few students were able to give us the carrying amount of the divisions here. Carrying amount of the divisions. So carrying amount of industrial division. Carrying amount of industrial division. Carrying amount of industrial division. Najua iwezo ukapata ya kusaidia tu haraka. Yeah, huyu amepata Dorothy, imagine. Because it's supposed to be 13,870 plus 8,000. Ukiangalia the assets given there, ladies and gentlemen, utarealize kwamba goodwill hakuna, so inafaa kuwe na goodwill hapo. Inafaa kuwe na goodwill ya 8,000. Oye, imagine examiner anakupatia assets pale. Anakupatia tu mambo. Lakini sasa amekunyima goodwill. Because inafaa ianza na goodwill. Kumbuka those assets in the cash generating unit, you're supposed to be having goodwill as the first thing there. Goodwill as the first thing. So then that gives us 21 what here? 870. 21,870 So then, ladies and gentlemen, are you able to calculate the impairment loss for industrial division? So go ahead and calculate impairment loss, industrial. Impairment loss equals CAR minus RA. CAR is 21,870 minus RA, which is 76,089. So is there somebody who is able to give us this figure really? Is there somebody who is able to give us this figure really? Mm-hmm. Is there something I'm missing? 7608.9, yes, 0.9. So it's supposed to be 21,870 minus this 7608.9, which in this case here gives me an impairment loss of 14,261.1, something like that. 0.1. So when I come to my tomorrow's session, I'll be able to teach you, ladies and gentlemen, how to get, in this case here, the impairment loss for this other division. This other division has got something that is very interesting. The concept of perpetuity, infinity. Is there anybody who is able to tell us something whenever they hear that language, either in AFR or AFM being used? Perpetuity. Is there anybody who is able to remind us any model? Perpetuity. Yeah, very good. So remember perpetuity, ladies and gentlemen, perpetuity. We always remember the Gachagwa's model, isn't it? Gachagwa's model, because Gachagua, he doesn't believe that Ndini Nyoro can come and overtake him. Gachagwa's model. So Gachagwa's model, I'll be able to remind you again when we come to our tomorrow's class. It is PO, provincial officer, equals district officer who has to grow in ranks like Gachagua grew in ranks all over Kenya without government. Kenya without government. Yeah, unfortunately, this question doesn't have growth rate. So at the end of the day, it'll amount to what you guys are calling amount over R at the end of the day. But it's always good for you to know perpetuity, Gachagua, perpetuity, Gachagua. All right. So as I disappear, because that's something I would want to do tomorrow, as I disappear, the 8,000 blessings, 8,000. Yes, we teach Excel for beginners, Linus. The 8,000. Can somebody tell this lady where the 8,000 first of all came from? Remember, goodwill, it was 12 in total. And then industrial goodwill was 8,000. Goodwill, 12,000 in total, but goodwill attributable to industrial was what here, somebody? 8,000. 8,000. So all those other inquiries regarding RCM, I would want you to channel them here. 0793 555 000. Please join us. Join us. All right. So it's my belief that you guys have enjoyed today's session, right? It's my belief that you guys have enjoyed today's session. M-Pesa number, yes. How could I pretend to forget this?